In this video, I'm going to go over another almost one-hit wonder. This particular recipe is actually quite intriguing and surprisingly profitable. More so than I actually thought it was when I was simply trying to combine different indicators to see what I could come up with. See, I spend a lot of time looking for market opportunities, and I spend even more time researching different combinations of indicators that produce unusual opportunities that can avoid market fluctuations. The kind of fluctuations since we've had from November 14th of 2021. So it's important to always be on the lookout for these unusual situations. And that's what led me to this interesting combination. And what makes it stand out, really, is its simplicity. You wouldn't think that it could be so effective at what it does, but when you actually see it and begin testing and analyzing it, its results are actually very understated compared to its potential. So let's get past all the nonsense and get into the chart. What is this wonderful combination of indicators that produces such stellar and spectacular results? Well, it is none other than MACD and momentum. The combination produces very good risk mitigation and quite spectacular results. Now, I currently have this set up as a simple take profit, but it can also be used to sell by strategies. And I'll get into that a little bit later. But for now, let's really get into the nitty-gritty of this. Let's look at MACD first, the driving force of this whole process. Now you'll see there are actually two different MACDs overlaid on this chart. I have one at the 5-minute mark, and I have a second MACD at the 4-hour mark. I'm using confirmation bias within the MACD module to actually be capable of combining two different time frames, looking for an absolute confirmation. Okay. Fast, slow, and smoothing are just a classic EMA, but you can see my fast line, slow line, and smoothing factor. All prime numbers and my consistent go-to numbers for the cryptocurrency market. I've just found these numbers really work well. They produce faster than normal results that can react to the cryptocurrency market volatility very well. And there is the rest of the first MACD indicator. Pretty simple, straightforward, nothing over the top. Except, of course, the changes to the fast, slow, and smoothing. But now the confirmation, you see the time frame is set for 240. So the confirmation analysis is on the 4-hour candle. So what this is really saying is I have to have a signal on the current chart, right now 5 minutes, and on the 4-hour chart. Both of them must line up in order to produce a buy or a sell. Now the advantages of this is the 4-hour chart shows trend. That is critical when you really start taking apart just how beneficial this recipe is. We only want trend, and we only want it going in our direction, up. So from that standpoint, you see this does it. Now, again, the fast, slow, and smoothing. Same numbers I used above, 11, 23, and 7. Prime numbers, but faster than the normal numbers. So even though this is on the 4-hour candle, I want slightly faster signals than the normal approach. Now with the 4-hour chart, I want a 5-minute holding period. That may seem strange, but I want these two indicators to line up in such a way that there's a little bit of latitude between the 4-hour chart and the 5-minute chart. And you would think it would cause false signals, and it might, but there's a second stage to this that we'll get to shortly. But for now, this is the basic settings for MACD. And as you can see, there's a lot of sell opportunities, but not very many buy opportunities. So you can see that the buy opportunities are already quite contained and slow. So having the confirmation process really helps control the level of false signals. The lighter colors on the chart are the 5-minute MACD. The darker colors on the chart are the 4-hour MACD. Short, sweet, and simple, but very profitable. And the first stage that drives this whole recipe. So now, let's move to the second indicator. Momentum. Now, this is another confirmation approach. It's actually two different momentums. Like the MACD, I'm doing a 5-minute momentum and a 4-hour momentum. And let's see what that looks like. So we have the confirmation set up. Momentum is just a simple moving average. Nothing complex, nothing over the top. Now I'm using a fast and a slow line of 197 because again, I want prime numbers. Everybody uses 200. That makes that level harvestable easily. By using 197, I'm close to 200, but I'm not as easily harvestable. So it's a slightly faster reaction for my momentum than somebody using 200 to determine which way the market is going. I could easily use 203, 201, any prime number in that combination would work just as well. Or if I wanted slightly slower, 193. Slightly faster, 193. So the prime numbers are a nice way of getting close to the mark, but not right on a mark. It's enough to upset the analysis to give you a slight edge. Now, the other thing with this is I am inverting the signals. I only want purchases to take place when they are above the line. So the market has to be hopefully moving in an uptrend. And of course, for the confirmation, the 4-hour mark, simple moving average, and again, I'm using these same settings I used in the 5-minute. I want consistency across my confirmations. Now you can mix it up and change the sizes, but for this recipe, I have found it works well as it is. So, nice and simple. Okay, now let's get out of this and look at the dollar cost averaging module. And here are a lot of surprises. This module actually is quite interesting. But let's first spread this out so we can see it. Now, not every coin is going to be a one position asset, but this process mitigates accumulation drastically, and it does very well. There are things you can do, and coins that do produce higher levels of accumulation, but I wanted something that proved very resilient against the market. Something that I could put $100 into one position and not worry about it. And that is exactly what this does. Again, this is a profit through aggregation approach, meaning you would trade multiple coins simultaneously, but you would be aware of the coins that you trade. Some coins do have accumulation, and I will demonstrate that shortly. But for now, let's just take a look at the very basic systems. Now, I talked about how this recipe had a bit of a surprise in the introduction. Well, now I'm going to show you that surprise. Let's go to the 1 hour mark, and you could use 1 hour or 57 minutes, it doesn't matter. But the 1 hour mark, let's spread this out. As you can see, very good results. The profits are quite nice. 21 trades. Maximum positions 2. But we're not done yet. Let's put this back on auto. And let's demonstrate for those that have higher risk tolerances. Let's spread this out so you can really see these numbers. They are important. Yes, you are reading that correct. 37% average profit. So if you're looking for a slower, more resilient approach at the 1 hour mark for Ethereum, 37% average profit. Think about that. How many other combinations produce such results? And all because a very simple momentum confirmation MACD based algorithm. Now, of course, the time frame is 800 days. That's a lot of time. That's pretty much 3 years. But still, if you're looking for a large investment practice, it's hard to beat this. This is something you could set up, let it run, and you have an incredible amount of profit. So 37 max positions 2. Okay, so let's take a look at the budget. $1,000 budget, $500 positions. So your $1,000 is used, 37% of that would be profit, $370, 5 times. Well, 5 times 3 is 1,500. You've made literally 50% return just within a very simple approach. Position size needs to equal duration, and this at a higher level is certainly a savings account worthy approach that would rival anything a bank would give you. 50% of your balance, providing you have it invested. So in this case, $500 positions would use a full $1,000 budget. You would be fully invested and you would have a very generous payout. This is the kind of situation you look for. This is the kind of situation that if you want a high return, slow and steady approach, it stands out. Okay, so let's go back to the full map. I'm going to go back to take profit because I prefer longer time frames. But also, if you really want to mitigate your risks, a simple take profit at 21%, at 21 trade cycles. You're not going to make as much profit, but you're not going to have as much risk. A good example is right here. Let's spread this out and take a look at this trade. This trade literally took only 5 hours. 5 hours, done. So even though you have to wait a long time over the course of 3 years for 21 trades, the risk of being in the market is very minimal compared to the entirety of the market itself. For example, let's look at this market. Let's look at the 1 hour market and take a look at just how crazy it has been. Here's a good example. Started up here at 2,800 all the way down to 1,800. 1,000 points. Now let's go back further. Again, you can see the market doing crazy stuff. And you see a buy-sell marker, minimal input, minimal risk. More crazy market. Now this one took a little bit of time to complete, but it still did it quite reasonably considering. And it did it after the hideous mid-November bear market start. So as you can see, it just keeps on going. Here it picks up in March. Gets out, nice little profit. We get that nice little run. Here we are in May. We get out, and then May starts going downhill. So as you can see, this market does quite well. Now let's go back. Keep looking at other options here. Nice little couple of swipes right there. Minimal risk. Here's one that did a little bit of accumulation. Nice little profit. So if you want a higher time frame superstar recipe, MACD and momentum really shine. But I personally like short-term trading. I like the 1 minute. But that isn't always possible. Or is it? Let's talk about that. As you can see, no trades at the 1 minute. No trades at the 3 minute. But I have trades at the 5 minute. What does that mean? Well, that means that you have a rough estimate of just how long each trade will take. It's important to remember when you look at time frames, your time frames aren't magical. A 5-minute time frame is just looking at one candle versus 5 candles. From the standpoint of TradingView or any other charting platform, the time frame is just a different view of the same picture. Basically, it's the amount of distance between you and the picture you're looking at. A 1-day candle lets you see a lot of information very far away. So let's say that is 100 feet. A 5-minute candle might be 50 feet from that picture. A 1-minute candle might be 1 foot from that picture. It's still the same picture. Your trades are still going to take the same amount of time. It's just you can't see the same amount of information the closer you get to the actual picture. So if you set this up for 1 minute, it's still going to be only 2 trades in 73 days. So 1, 3, or 5 minutes, it's still 73 days for 2 trades. It's just a matter of perspective, nothing more. But now let's get into how this perspective looks on other coins. Let's see the full view, looking at the full recipe. Okay, here's chain link. One trade. And it has a bit of an accumulation. But still very good. Three trade cycles for LTC. Six trade cycles. Let's zoom this out some. 6 trade cycles for Neo. Low exposure, low risk, and the price is above, going up in the momentum. So that's a good sign. That's the kind of stuff we want to see. And 6 trade cycles is an exceptionally good coin. So that means if you're trading multiple coins looking for better opportunities, this coin should trade more frequently than others. And as you can see, the MACD says there's a lot of opportunities, but the momentum says there's not. And we can really see from here, the market just starts going down and just keeps going down. Not a market we want to be in. Not at all. Here we are. Another huge market drop, a little bit of an uptick, and then back to dropping. So this is a good example of why this recipe is so powerful. Let's go back to the far right. Tron. Again, 6 trades, not bad. For Tron, that is really good. It's just a really difficult coin. XLM. One trade. Typical for this kind of a coin. It's just not a very volatile coin or a very fast moving coin. Monero. 6 trades in Monero. Not bad. Certainly worth looking at. And again, having this in with a stack of coins, great way to get the most volatile and aggressive coins to trade more frequently. And the 5-minute chart is not a bad chart. XRP, another coin that is tedious to work with, but this recipe just does outstandingly well. XTZ, 4 trade cycles. Coin has very slow movement overall, not very volatile, but certainly worth trading with this kind of an approach. So MACD momentum is a spectacular approach. And as you can see from each of the coins we've looked at, the level of exposure and the level of risk is very minimal comparatively speaking. So if you need a good point for both take profit and strategy, this does exceptionally well. Simple process, easy to see, easy to visualize, and it works on a wide range of coins. Even coins you probably shouldn't be trading to begin with. And let's see if I can find an example of a coin that really should not be traded. Oh, let's see. How about Luna Classic? Okay, they wiped out most of the history, which is good. But let's see what else we can think of. How about Civic? It's also another difficult coin. And it's a profitable coin. But you'll notice that it does have steeper than normal exposure. But still, it turns a profit. It's worth considering if you have the budget and the risk assessment for this kind of an asset. And that really is the point with any approach. You must always trade it according to your risk assessment and your own budget. It doesn't matter how successful it is if you don't have the money to back it up or the ability to handle the risk for a worst case market condition. There's only so far a recipe like this can do until it just reaches the point that your budget can't sustain it. But this is an example of a coin that could be traded and do well. Let's pick another coin that is difficult to trade. It's difficult because it's used as currency on the exchange. You would think that would make it easier, but it's not. Currency coins like BNB or KCS can be very difficult to trade, but it still did respectably well. 2 trades in 73 days. Standard for what I would expect for this strategy. Okay, let's see what else we can find. Okay, this one does 4 trades. Not bad. And results are pretty respectable. So, MACD momentum. This is a recipe you should have in your tool chest. It's a recipe you should consider, and it just does well. Small time frames, higher time frames, it doesn't matter. It does well. 16 trade cycles, 2.4%. That is good. That's respectable. For the level of exposure that this asset has, it is spectacular. The reason I'm showing this longer term recipe is because over the last several weeks, I have watched a lot of people get liquidated in what you see on this chart. A very brutal market downturn. The worst case scenario approach. That is a problem. People didn't plan for this. They didn't plan for a bear market that started in the middle of November of last year. And it took nearly 6 months before it started showing signs of turning around. Trading isn't quick. It isn't fast. It's not get rich overnight. Trading requires discipline, patience, and sometimes looking at the market in a different approach or having multiple approaches going simultaneously. This approach, whether it is 5 minutes or 1 hour, shows an example of just what Jackrabbit can do, and really any combination with the right tuning. Jackrabbit just makes it easier. But this is what you need to prepare for. You need to prepare for unusual market conditions. Always plan for the worst case scenario as commonplace. Whether you run multiple approaches, short-term and long-term, in different sub-accounts or different exchanges, always think about this in the long term. This isn't going to make you rich overnight. This isn't going to make you rich tomorrow or the day after. This is going to take time, just like a garden. You plant a seed, you can't pick fruit off the tree the next day. You've got to wait for the tree to grow slowly and consistently. Trading is the same way. This recipe will always give you reasonable results. As you can see from the analysis, it's not very hard to see and extrapolate just how well this will work over a long period of time. Or for that matter, any Jackrabbit recipe. They all work well. Different levels of aggression, different levels of defensiveness, but when tuned properly, they will always work well. It's just a matter of being patient for the garden to grow. So as you progress with your trading, when you know you have something that works like this, let it grow, let it blossom, let it bear fruit. This simple recipe doesn't look like much, but it is profitable. Its profits are all but guaranteed. This is the advantage that this type of an approach gives you. Consistency without human emotion. My Twitter account has been blown up to Neverland over the last 6 months for people that have not been willing to wait out the market and plan for the worst case scenario. I don't know how many influencers and gurus have said, this is the end of the market. We're now going to the moon. Get ready for the great bull run, just to have people invest large amounts of money for the whole market to keep going down. I don't know when the market is going to turn around. I can say that there looks like there are signs that it will turn around. But I can't simply magically wave my hand and say, now's the time to get in and double down. I don't think that is wise. I don't think that's appropriate. That's not the way to manage the market. The best approach is with consistency, with a specific strategy or a set of strategies. Bitcoin, 17 trade cycles, consistent. If you want to really up the ante and take a look at the market at a whole different approach, 4 trade cycles, long-term thinking, an average of 29% profit. Now you will have more accumulation, but this is spectacular. If you have the risk assessment and you have the ability to handle this kind of trading, this is where things happen. But I'm very happy with a simple approach with minimal risk. So for me, this works. Take profit works. It's simple. No, I may not get the highest level of profits, but it fits my budget. It fits my risk assessment. That is the important part. And that is how you need to think about your trading. Now, a question came up that I want to discuss as I round this video out. When should you get into a market? When is the best time to actually buy Bitcoin or Ethereum or Ripple or whatever coin that you're talking about? Should you buy it in a bull market? Should you buy it in a bear market? Ideally, the best time to actually buy it is at the bottom of a bear market. But if you're looking for a long-term averaging process, then what you're looking at on the screen, this market downturn, a little bit every month, is the perfect time to buy it. Buying it in a bull market means you're going to pay higher prices. Buying it in a bear market means you're going to pay lower prices. Lower prices produce better profits. So buy in the bear market, but only if your risk assessment can handle it. The screen right here is a perfect example of how to see where the bottom might be. You can actually see several points where there's a clear, definitive downtrend. You want to wait till you see the bottom, like the right-hand side where it's flattening out. That is a good place to buy. When the market is still going down or it's at the top, that's not a good place to buy. And that's why algorithmic trading is so beneficial. It can help you figure out opportunities specific to the machine being able to get in and out of it on its own. As I mentioned, the bear market actually started November 14th or 15th, and yet throughout that process, this made 2 complete successful trades. 2 different times of profit. And you can see how much the price dropped. And you could see that it got out of the market right before the price dropped. 50% loss of value. And yet, this still made profit. That is why these approaches are so important. They take fear and greed out of the picture. They give you consistency. They give you mathematics and science. So if you're not subscribed, please do so. Please like this video to help show other people that trading in the crypto market isn't a scam. It is a science. It is based upon mathematics and consistency. And most importantly, leave a comment for me. What experiences have you had in the market? Have you let your emotions get the best of you when trading? Or do you let the machine do it for you once you found the approach that works best for your situation? Let me know. Until next time.